Companies like Amazon, Microsoft, Alphabet, and others are spending tens of billions of dollars in building new data centers optimized for artificial intelligence. And that's been benefiting companies like Vertiv Holdings and Supermicro Computer, which operates in that market, helping facilitate the growth of these new data centers in various ways. But which one is the better investment, Supermicro Computer or Vertiv Holdings? That's the question I'm going to answer in this video, comparing these two companies on revenue, profit margin, cash flow, return on invested capital, and finally bringing it all together with valuation to determine which one I think is the better stock to buy today.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Starting with revenue growth, you'll notice that they've both been growing nicely. Starting with Vertiv, that's added a couple of $1 billion in revenue from 2021, where it was at around 4.2 billion, all the way up to 7.5 billion in trailing 12-month revenue. But that growth was trounced by Supermicro Computer, which was behind Vertiv by about $1 billion in revenue in 2021 and has exploded to double that of Vertiv at $15 billion in trailing 12-month revenue. That's nearly 4 or 5x from 2021. Supermicro Computer forecasting continued sales growth over the next year, suggesting it can exceed $25 billion in trailing 12-month revenue 1 year from now. So no slowdown expected for Supermicro Computer. Meanwhile, Vertiv reported increasing amounts of orders. And so as the company fulfills that backlog, its revenue growth also looks strong for future quarters. Comparing the two on profit margin, we see a different story, and they're going in opposite directions, with Vertiv improving its operating margin to 16.15%, while Supermicro's operating margin is declining to 8.5%. Supermicro Computer said that they're shooting to gain market share, and they're okay with their operating profit margin where it is, and even if it moves a little bit lower, they're okay with that because they want to gain market share. And their competitors are undertaking a similar strategy. Their profit margins are in the similar range. Longer term, I wouldn't expect Supermicro's operating margins to exceed 10%. If you go back, they've not regularly exceeded 10%. Their industry is not one that generates greater profit margins. Similar story when you compare the two on cash flow from operations to sales. They're going in opposite directions. Vertiv's cash flow from operations to sales closer to 17%, while Supermicro Computer is the same number but negative. So negative 16.6% and going in the wrong direction for Supermicro. Again, this has to do with the company's narrow and decreasing profit margins, but also because of the way the company's revenue has exploded, it's creating a decrease in cash flow from operations because it's paying to create the supplies, to create the products, and then it's delivering those products to its customers and it's waiting to receive payment from customers. So the suppliers of Supermicro have greater negotiating power against it compared to the bargaining power of Supermicro Computer against its buyers. So the buyers of Supermicro Computer's products have greater negotiating power against Supermicro, as well as its suppliers have greater negotiating power against Supermicro. On both sides of the equation, Supermicro Computer is facing stronger counterparties, and that's working against the company's cash flow from operations. Now, when we compare return on invested capital is where Supermicro has the advantage. The company's 26.7% ROIC is better than Vertiv's ROIC, but Vertiv again is demonstrating better trend lines and similar, Vertiv's return on invested capital is improving while Supermicro's is declining. And so across the board, all of the categories we looked at, except for revenue growth, Vertiv Holdings is performing better than Supermicro Computer. Finally, let's compare the two on valuation And you'll notice that Supermicro Computer is trading at a fraction of the valuation of Vertiv now. Supermicro is trading at a forward PE of 11, while Vertiv is trading at a forward PE of 37. Now, up until this point, I haven't touched on the controversies surrounding Supermicro Computer relating to its financial statements. It's delayed reporting its financial statement. It undertook an internal investigation to make sure that its financial statements are reported as stated by the General Accepted Accounting Principles, US GAAP. And I don't think investors were satisfied with the results of that investigation. I know I was not completely satisfied with the results of that internal investigation by Supermicro Computer. So question marks still remain about the company's financial statements, the integrity of the financial statements, the accuracy of the financial statements, the quality of the financial statements, all of which are still under question from investors like myself. Vertiv Holdings trading at a more than 3x valuation, that makes the decision a little more difficult. If they were trading at the same price, a forward PE of 11, it would be Vertiv, would be a no-brainer. But given the difference in valuation, it makes the decision closer, it makes the decision tougher. Still, if I was to pick between these two, I would pick Vertiv Holdings as the better investment. Not only because the company's performance across several critical categories are better than Supermicro Computer, but also because of those question marks about the financial statements. That plays a meaningful role in my choice of Vertiv over Supermicro Computer. It plays a role in this decision. Should they report and deliver? So the question marks surrounding Supermicro Computer's financial statements are bringing down my interest in Supermicro Computer stock. Therefore, overall, the factors weighing on this decision favor Vertiv Holdings. And so if I had to pick today on which one of these two AI stocks I would want to own longer term, I would pick Vertiv as my choice. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.